Morning, this is Steve O'Hare from Signal Centre, and today is Wednesday the 22nd of September, and I'm bringing you the commodity section, or the energy section. We're going to take a look at crude oil this morning, both WTI and Brent levels, and also take a look at natural gas, which has been in the headlines of late, and it'll be good to sort of catch up where the levels are there to watch as well from a technical perspective. So we'll start with the higher time frame charts and drill down to shorter time frame to get a little bit more color on this. And this is a formation I've been mentioning for a while now. We ran into resistance, 76.35 WTI crude oil. That was the high on this chart, and it formed a evening doji star formation, which is a negative formation. So it's ran into resistance and rejected it. The previous swing high back in October 2018 was 76.80, so we stalled just in front of that. Over the past couple of days, conditions have been a bit choppier. We've got the market still wary over supply conditions, and also we've got the China effect with everything going on there, and this is having an impact on the potential consumption as well of oil. So a little bit indifferent. Let's drill down to the daily chart and see the formations we're looking at. There's a bit of a triangle formation going on here. We've only got a trend line here with it's got 3 points connected. It's got these 2 days here and that one there, so we can say that's a trend line. And this one obviously has a couple of days early on with this one, and we're looking at the top of that triangle range. And obviously we've had an uptrend, so potential for this to be a continuation, but again, we wait and see where it breaks. Really has to break above, well, let's take a look at the 4-hour chart to get a little bit more accurate readings on this. So 72.85 is the resistance here. Support coming in at 69.39, or just below there where we spiked down to yesterday around 3 o'clock. We got all inventories out later. That's going to be key, so bear that in mind. But we've had a decent reaction higher over the last 12 to 18 hours of price action. It did look like we were stalling. I reviewed this a little while ago, and we saw this candle on the hourly chart, so a bit of a shooting star candle, maybe two of them really, where price action has moved higher, tried to sort of post a new high but failed and been sold back into. And we're seeing the price action in this hour also try to push higher. Really, if we do get a break above 71.68, then that does open up the upside a little bit, but all inventories out later, so beware of that. On the Brent side of things, again, from a longer term perspective, we've got the same sort of price action, same sort of price formations. The levels to watch really will drop down to the 4-hour chart to sort of pick up on this. And we've had the reaction from this 72.60 level, which again was just below the previous swing low, 72.68, back on the 14th of September, so just over a week ago. And really looking to sort of see a little bit of a reaction really around these inventories, but again, the 4-hour chart posted a bit of a shooting star, and we've seen price action start the 9 o'clock candle on the 4-hour chart, and it's trying to push higher once again. So again, if we do get a break or push above 74.82 on the Brent oil, then that maybe opens up a move to 75.50. Otherwise, we're looking for maybe a retest of this 72.60, which looks like solid resistance support at the moment. Natural gas, take a look at the longer term chart on natural gas, and we can really dive into where we are. It feels like it's prices have spiked to huge all-time highs, but as we can see from this chart, they are a long way off that. From the 2008 credit crunch swing high of $14.27, we've drawn Fibonacci down to the post of the low, which is $1.52 or $1.53, and we haven't even seen a 38% retracement yet. So still potential on the upside for natural gas, despite how it's felt that we've had this euphoric rise, which we saw back in 2018 as well. We saw quite a decent percentage rise there from the low of the year to the high of the year, we saw a 94% upswing in prices. That's compared to the low of this year to the high, has actually seen a 271% increase in the price of natural gas in just well, since June 2020. That's just over a year. So that's pretty remarkable. And but we are forming what looks like we're coming to the end of the month as well. We're not far away from the end of the month. Only got 10 days, and the spike higher has left a bit of a bearish topping formation, shooting star candles galore, and then this reaction lower. So the concerns seem to have eased slightly. There's still potential, but if we look at the volumes, we can see how the volumes spiked really. This is a 4-hour chart. The volumes have spiked really since sort of end of August, and when we got the break of 420. For 420 for me is really where the support will come in, and we can see that since the sell-off started, we've seen the volumes spiking and falling from there. So we are seeing a sort of natural move where volume is falling as prices fall as well. So that sort of boost or injection of volume we had has dissipated. So try and grab a few little levels to watch on a daily basis. Obviously, we've got we'll have previous resistance turned into support. That's come in the shape of around about 479. We got the spike down to 476. A break below there that opens up a further move to potentially 458. But 420 for me is the level to really sort of like consider whether it's worth getting long of this again. On the upside, really need to clear $5. $5.10 would sort of like be quite a significant barrier to overcome at the moment. That's where we see resistance, and I'd be looking to fade maybe in front of there with a tight stop, maybe at 520, but a break above there and a clear break of 520 could open up another further attack on the upside, and even looking at levels that we saw back in 2014 of 668. That's it from me today. I hope you enjoyed it. I hope it's been informative, and I look forward to sharing some more views with you next week.